Good morning. Welcome to Stock Market Today. It's Thursday, June 25th, 2020. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today, where you can sign up for a free email where we get a lot of the content for this show. We also give you daily stock ideas to consider. Those hit your inbox every trading day before the market opens. So U.S. equities were down in Wednesday's trading, erasing gains for the week as the NASDAQ composite broke an 8-day winning streak. All sectors were lower, with energy, industrials, and financials lagging. Utilities and staples did outperform. Treasuries were stronger with the curve flattening. The dollar was stronger on the major crosses. Gold finished down 40 basis points. WTI crude settled down 5.8% as it seems that investors have begun to wake up to the rising COVID-19 case count in the U.S. Yesterday, New York, New Jersey, and Connecticut announced that visitors from hotspot states will be quarantined for 14 days when they enter. As we get to the desk here this morning, S&P futures are down slightly in volatile pre-market trading. Asian markets are lower overnight. China was closed for a holiday. European markets are higher, having reversed earlier losses. Treasuries are mostly stronger, with the curve continuing to flatten. The dollar is better against both the yen and the euro. Gold is down 20 basis points, and WTI crude is off a like amount. And as we look at the structure of the S&P 500 here, we have another test of the 200-day moving average, which held again, right? We fell and then started to rally a little bit later in the day, still closed in the lower half of the range. So the key question, I think, now is this simply a consolidation after a strong uptrend or the start of something new? The answer to that question is nobody knows, right? What we can do is look for these support levels to hold, 3,000 to 3,100 so far holding strong, rising 50-day moving average starting to get into provide another area of support up here, if you will. Below 3,000, we have to start thinking about 28.50 to 29.50. If support holds, the February highs are still in play, right? So that's the key. I wrote in our note over the weekend that we are kind of stuck in this no man's land between support and resistance, where we can see some choppy, volatile trade, and we want to see either a breakthrough kind of 3,200, 3,250 to resume the uptrend, or a breakdown and then kind of reevaluate the situation. Resistance currently, we have to start calling 3,150 resistance, as the market has now bumped its head on that level 1, 2, 3 times and not been able to break through above that 3,250 up here around the June 8th highs. Near term, we're oversold. Chaikin money flow is bullish but declining. So that's the structure as we enter trading on a Thursday morning. Taking a look at the market in a minute. Kind of the key highlights from my note today. Stocks move lower. COVID case count continues to spike. Momentum is showing relative strength. That's the momentum factor ETF, MTUM. We'll take a look at that a little later in the show. Breadth breaks down. It's been kind of holding steady, showing a little bit of signs of weakness, both at the long-term trend lines and at the short-term trend lines. Finally seeing a breakdown in the middle as well. Global stocks fail at their 200-day moving average. And as I said, futures do point to a slightly lower open here today. As we look at the major indices from a power bar perspective, we can see the Dow deteriorated yesterday with that 2.6% decline, 3 bulls to 10 bears there. S&P 500 down 2.5%. 81 to 143 bulls to bears. NASDAQ outperformed on the day, only down 2%, 33 to 16. Big jump in the bears here on the day. Small caps underperformed, down 3.22%, and see a deterioration in their power bar ratio, 455 to 298 bulls to bears for the small caps. Flight to safety on the day sends bonds higher, yields lower. According to the Chaikin power bar, small cap stocks are somewhat more bullish than large cap stocks. The major indexes across the board, however, are mixed. Looking now at our stocks of the day, running a screen here. And the thought behind the screen was we're in some choppy consolidative trading. S&P 500 thus far holding support after pulling back from those June 8th highs. So what I wanted to do was I wanted to see which stocks in the Russell 3000 are exhibiting relative strength, right, and have good technicals. So, using our screener and Chaikin Analytics, I can, start with the Russell 3000 as a universe. For here, I just wanted stocks that were not bearish, right? So neutral or better, Chaikin Analytics stock rating, power gauge rating, with bullish technicals that are currently oversold with strong money flow and strong relative strength, right? And the screen returns 36 names for consideration for investors looking for bullish ideas. Should support continue to hold here around the 3,000 mark, right? So I think that this is a good list of names to start to look at for potential opportunities if we see signs of stabilization and begin to move higher from current support levels. So if you'd like to screenshot this, take a screenshot, certainly add it to a watch list. If you maintain a watch list of potential bullish opportunities at the individual stock level, this list of 36 stocks, it's featured in my note today, and I'm sharing it here with you as a screener that I'm running. So looking for relative strength as the market tests and thus far holds near-term support. Our sector tracker, all red on the screen over the last 5 days after that sell-off yesterday. The relative strength is kind of interesting because it goes back to what we saw pre-COVID, right? And right, we got the kind of relief rally in the most beaten down areas of the market, right? The cyclical, right, value type areas of the market rebounded strongly. But now, as the market begins to run out of steam to the upside, we're seeing a reassertion of leadership by what had been leadership leading into the downturn, right? So tech, comms, discretionary, and healthcare. Staples, materials, and Utes are middle of the road. Financials, industrials, REITs, and energy at the bottom of the list, right? Financials, industrials, and energy, part of that reflation group of stocks, if you will, that rotation trade that a lot of people were talking about, which I just couldn't buy into. And it seems that that trade is stalling out here in the near term. So something to continue to watch. All sectors lower over the past 5 days, but leadership concentrated in the more growth sectors of the market, if you will. Our industry in focus, telecom services. Over the past 6 months, it's outperformed slightly, beating the S&P 500 by nearly 3%. Power bar ratio, which measures future potential, is strong, 7 bulls to 5 bears. It's middle of the road, though, of the 21 subsectors. It's ranked number 12. So some names to potentially consider there. Telephone and data, TDS, Ciena, CIEN, and Adtran, ADTN, all have very bullish Chaikin power gauge ratings. And the ETF itself is a little bit more of a mixed picture as far as I'm concerned. Really no discernible trend here other than sideways. I guess sideways is a trend, right? We can go up, we can go down, or we can just go sideways. And this has been sideways for the past year. Now, the fund does have a bullish ETF power gauge rating, and it's above the rising long-term trend line. Relative strength waning is a concern as far as I'm concerned, especially when we see it with this strong downtick, if you will, in money flow over the past couple of months. Now, the fund is oversold here in the near term. We'll see if the long-term trend line acts as any kind of support. But the fund itself is a mixed bag. I think it's a situation where you need to go through stock by stock and look for what could potentially be compelling opportunities at the individual stock level. But when I kind of look at the group as a whole, it's very much a mixed bag to me. I can certainly think of other areas of the market where I'd rather be focused for bullish ideas. But, this is auto-generated as part of that email that goes out pre-market. And I just kind of analyze it for you in real time, as if you came to me and said, hey, Dan, what do you think of XTL? I just give you my honest assessment of what I think based on what we're seeing here. Taking a look at yesterday's S&P 500 movers and shakers, our gainers and losers. Kroger up 2.25%, a big down tape. Nothing company specific there. My thought is that rising COVID case counts as people revisiting some of the names that did well in the early stages of the pandemic. Tractor Supply, TSCO, nothing company specific there. Up 1.6%. CHRW, same story, 1.6%, nothing company specific. T-Mobile did price an offering. That stock was higher by 1.18%. Gilead, part of this group of COVID stocks in the drug space that did well yesterday. Gilead up 1.17%. Loser side of the board. Barclays downgraded the cruise lines, Norwegian and Royal, down 12% and 11% respectively on the heels of that Barclays downgrade. At the same time, Carnival had its credit rating downgraded at S&P. So CCL down 11% yesterday. Wynn down 11%. Nothing company specific there. Obviously, casino stocks, rising case count, going to be impacted. And then Diamondback Energy, FANG, the ticker symbol, down 9.5%. Nothing company specific. I do note that they did catch an upgrade here today, so we'll see if the stock can rebound. But it does maintain a bearish rating here at Chaikin Analytics. So let's dive into the charts now. On Thursdays, we look at market breadth, and the interesting dynamic that we started to point out last week was that the percentage of stocks above their 200-day moving average was still relatively weak, still below 50%. While the intermediate term 50-day percentage of stocks above their 50-day moving average was solid, up over 70%. At the same time, I pointed out, it's not here on the chart, but the percentage of stocks above their 20-day moving average was also weak last week. So now we've seen this little downtick in the market, this sideways consolidation / downtick, and breadth has broken down further, right? The percentage of stocks above their 200-day moving average down around 36%. Big collapse in the percentage of stocks above their 50-day moving average to about 57%. And what I will note is that the percentage of stocks above their 20-day moving average is now down around 13%. The advanced decline line continues to track the market pretty closely, not really giving us a divergence, really just confirming what we're seeing both to the upside and the downside as it relates to the movements in the S&P 500. Now, one of the things that I'm pointing out in my note, a new addition. So for those of you who get my note every day, if you take the 14-day trial, you'll get my note every day. Percentage of stocks in the S&P 500, either on MACD buy signals or sell signals, flashed a negative divergence on June 8th. And currently about 90% of the stocks in the S&P 500 are on MACD sell signals. So just another way of looking at breadth, definitely shorter term in nature, but just something I've been exploring and introduced in my note today. Momentum has relative strength, and that it was down yesterday. There's no two ways about it. Down 1.9%, but it did outperform. It was less bad than the overall market. And what's interesting to me is this spike in momentum here, right? As people were kind of factoring in, a potential shift or a rotation in the market, momentum's relative strength started to go sideways and trending lower. But now, really since the beginning of June, since that June 8th top, or near-term top, if you will, momentum has started to outperform once again. On an absolute basis, the iShares MSCI US Momentum Factor ETF has rallied very similar to the market, a little bit of a consolidation here in the near term. Clear line in the sand at about the 122.5 level, just above the flat to slightly rising 200-day moving average. Now, what intrigues me is that the RSI, right, a momentum indicator of the momentum ETF, is holding bullish ranges, right? It's kind of got back above 50, and it's maintained above that level as the fund has continued to rise. So I think that, as we think about where is relative strength in the market, I showed you that screen of stocks. You can start to think about it thematically as well. And it appears that relative strength in the near term is with the momentum factor. So something to keep in mind, you can drill down on that ETF and look for individual names that have the potential to continue to outperform. And then finally, global stocks. They're fading from the 200-day moving average. The ACWI MSCI ex-US fund rallied, tried to break above, and now churning around the 200-day above the 50-day, getting close to oversold levels based on that 13-period CCI. But what's caught my attention is this bit of a rounding bottom on a relative basis. So could it be a time where foreign stocks begin to outperform U.S.? I'm not quite there yet, but it's something we're paying attention to. Take us for that trial. I'll be back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.